All right, folks, it is August 13th, Sunday session coming in here for you guys. Appreciate you for tuning in. Going to share this one out on the X.com platform real quick. Let everyone know that we are live. Appreciate you guys. We got TikTok, we got YouTube rolling. It's a Sunday session. Got another cup of coffee next to me. Now, I did want to say, all is well over here. All is fantastic. The only problem really that I have right now is that wifey's already got the pumpkin spice latte creamer for the coffee. And I mean, we're not even halfway through August yet. Can we just enjoy summer before we get into the pumpkin spice latte phase of the year? I mean, seriously. First world married problems. But appreciate everyone for tuning in. If you guys could do me a big favor, could you smash that thumbs up for me and share this one out far and wide? We got a lot to cover, and so I'm going to take one more sip of my pumpkin spice latte creamered coffee, and then we're going to get this party started. I appreciate you guys for coming in. Thank you so much. Let's get it popping. Appreciate you guys. God bless you all. Right now, at the time of this recording, we're about 12:30 on the West Coast. Let's take a look at where we're at. So we are at 29,400 for our Bitcoin, 1855 for Ethereum, and XRP is up to 63 cents. 63.5 cents for XRP, a nice little green candle that brought us up here today. And we're going to take a look at the charts right here. You can see the sticks, what we're dealing with. Over the past few days here, we've really been trading within a very tight range. You know, we did go up to 29,700. That was on Thursday. Back down to about, what do we got here for this level? 29,200. And, you know, this market's kind of fizzling out, I would say. Was given my Discord weekly update yesterday. And the way that I'm seeing this thing is that a lot of the bullish narratives that have been pushing this thing are kind of up. There still is some rampant stablecoin manipulation to helping keep things propped up. And, Bitcoin has benefited from that move. Bitcoin has benefited from that move throughout this whole year. But I think that folks are kind of checked out now, enjoying the last bit of summer. The markets are kind of just churning sideways. And I'm going to show you guys a couple of things here as we go through the current events, covering the economic data. I got a chart comparison that takes us back to 1929, the peak right before the crash, and some similarities that we find. Two peaks being achieved before we come down and correct. And so I'm watching something interesting right here in the markets, and I'm going to go over through the Bitcoin spot ETF got denied, or I should say an former SEC official is saying that a Bitcoin spot ETF is not going to be getting passed anytime soon. Crypto regulations, no time soon. Congress on summer break. They're at the county fair. The presidential candidate, Vivek, singing Lose Yourself by Eminem at the county fair. That's where we're at in the simulation matrix as we decode and break it down for the common man and woman who's trying to take advantage of the greatest transfer in wealth in world history. I appreciate all of you guys for supporting this channel. We're going to run through a lot here tonight. So as always, make sure that you've subscribed, hit that notification bell so you don't miss any of our further updates. Quick note on the Twitter Spaces tonight. Family function here tonight, so we are going to postpone the Twitter Spaces. I'll see if I get back at a decent time tonight. I might fire one up a little bit later, but I'm excited. We got a fantastic one coming your way next week, next Sunday. And so every Sunday at 5 p.m. Pacific Standard Time, make sure you mark your calendar, because that's when we're locking in these spaces over there on the X.com platform. With that all out of the way, let's get straight to it. Market's not really doing much, so we'll go right into the key events that we got coming up this week from the Kobesi letter. July retail sales data Tuesday, building permits on Wednesday. That's going to be very interesting. I know that we're seeing the land sales are on fire. A lot of builders trying to take advantage of these high prices while they can. Fed meeting minutes coming in on Wednesday. We're going to get into the mind of these, the Federal Reserve and the decisions that they're making. Initial jobless claims coming in on Thursday, with the Philly Fed PMI data coming in on Thursday. Retail earnings from a couple companies there, and a big week for consumer data ahead. Now, what about consumer inflation? What about producer price inflation? It's getting hot. Peter Schiff. Today's hotter than expected 0.3 rise in July PPI, which is your producer price index, is only the beginning. Future, even larger upside surprises are coming. The worst part is that by the time the U.S. economy officially enters a recession, inflation will be too high for the Fed to stimulate with rate cuts. So we're expecting that Fed pivot to come in next year by cutting rates, turning back on the money printers potentially. But in the meantime, the producer price inflation getting hot once again, along with the CPI increase that came in this week as well. So we had gotten the CPI lie. Remember, it's manipulated government data. CPI lie coming in at 3% last month, and now we're back up to 3.2%. So we're seeing a return. The trend is back towards more inflation. Go figure. I put out the tweet yesterday. $50 for an all-day wristband at the carnival. Costs $15 to enter the fair, $17 for your corn dog, $21 for your turkey leg, and $6 for your soda pop if you're looking to go to the county fair this year. How about that for inflation, right? The true inflation. While they tell us that inflation's only at 3%, I mean, I can't remember paying $50 for a wristband. I mean, from what I can recall as a kid, which I am getting a little bit older, I will say that. I will admit that. I am getting a little bit older. But back in my day, which wasn't too long ago, I feel like we were paying like $20 to enter and get your wristband. I mean, maybe I'm not remembering that correctly, but $17 for your corn dog. I will say it was a fantastic fair dog for sure. But, you know, turkey leg for $21, and it was a good time. But it's, it's a different experience at the family fair. It's a different experience filling up at the pump. And when you go to pay for real goods and real services and experiences, I can't find 3.3% inflation to save my life, you know? And so this is the manipulated data that continues to try to cover over the true situation on the streets. But not only seeing the return to the consumer prices, you're seeing the return to the producer price index. And then we've also covered how the oil prices have been going back up above $80 per barrel. And we're currently at a 2 million barrel per day deficit. So inflation's not going away. And the cooling off that we had here recently was driven primarily by the fact that the Fed was raising interest rates at the fastest pace in history, which drove up that return on the bond market, drove up that flight and return to the dollar, and the dollar was strong. You guys saw that dollar increased up to the high. I think it was last year, the highs on that DXY were October of 2022. We've since rolled over, and now we've dropped below 100, trading at about 100 right now on that DXY. And so the dollar struggling once again as we get to see the situation in the United States not getting any better for our government and their deficit. And this is from the Kobesi letter once again. The latest U.S. budget numbers show that the deficit this fiscal year so far is at $1.6 trillion. So the estimates that we were running with was about $2 trillion. We are on pace. We might even break that. Deficit spending is $500 billion bigger than the entire Social Security program. Now, we asked the question very simply, how's your program working out? I tell you what, folks, we ain't going to be able to afford any program. Doesn't matter, what program, what country you want to send your money to, we ain't going to have it. And the only way we're going to have it is by inflating our way out of this crisis, and it's going to be default by inflation. The deficit is more than 2 times the amount of money the U.S. has spent on healthcare. Is this what Fitch meant by fiscal deterioration? And this comes after Fitch and the ratings agencies dropped us down from AAA to, AA plus, whatever that new scale is in the new mass, right? In the new Common Core mass, the new Economic 101 definition of recession has been changed. They've got this thing completely upside down, but they finally are having to admit how bad it is. And that's why the ratings agencies came in and downgraded the United States debt and our bonds. And there's no end in sight to this. Meanwhile, we have the SEC continuing their attack on the cryptocurrency space. Wanted to show you guys this one before we get into the crypto update later on. But another settlement with the SEC, this one happens to be Bittrex, agrees to pay $24 million fine. The crypto exchange faced charges of offering U.S. investors access to unregistered securities. Crypto exchange Bittrex settled charges of offering U.S. investors access to unregistered securities on Thursday, agreeing to pay a $24 million fine within 2 months of filing a liquidation plan for the exchange. So once again, more businesses, more entrepreneurs, more capitalists, more people trying to operate within the United States getting shut down and going bankrupt because our government hasn't provided us clarity from Congress, and our SEC wants to come in and kill everybody. The SEC sued Bittrex, which later filed for bankruptcy in May earlier this year, saying it simultaneously operated a securities exchange, broker, and clearinghouse without registering as any of these things with the regulator. Now, as you guys know, the SEC has brought similar charges against fellow crypto exchanges Coinbase and Binance. The SEC further, and that's the Binance US subsidiary, remember that, different company actually. They say that they're two completely separate things, but the fraud that's being alleged in that case too does tie back to how, Binance US is essentially just the extension of CZ's operation with the larger Binance. The SEC further alleged that Bittrex directed crypto issuers to delete public statements that could suggest their tokens might violate securities laws. Now, as I've been saying, we don't want to see the SEC going after and killing this whole space. Is there a lot of fraud? Is there a lot of Ponzi schemes? Is there a lot of scams? 100%. And they have plenty of securities offerings that did occur, Ethereum ICO being one of the largest ones. But they're going after the folks that are just trying to do the right things, trying to provide opportunities, trying to provide folks access to these markets. Is 99% of crypto going to go away? Absolutely. But you're not allowing folks access to legitimate cryptocurrencies that have utility and will help humanity move forward. But good guy Gary gets to come in, act like he protected investors as we get another check over $20 million to the SEC coffers. So once again, no money being directed to anybody who's been quote unquote harmed or who needs to be protected, but the SEC gets to claim victory here once again. SEC will not approve a spot Bitcoin ETF. Former SEC chief says this one was just shared here before I fired up this live. So once again, they approve futures trading. So they'll let you use futures. They'll let you leverage and trade derivatives of Bitcoin, but they won't let you trade a spot Bitcoin ETF. It's completely backwards. Now, talking about not cutting a deal, we got this one just came in yesterday. Before leaving Iowa, Donald Trump tells reporters he will never take a plea deal, specifically in Georgia. A reporter asked him, "Is there any chance you take a plea deal in Georgia?" Trump says, quote, "We did nothing wrong. We don't ever take a plea deal. We don't take plea deals. It's a wise guy question. We don't take plea deals because we did nothing wrong. It's called," and I'm not even going to say those words, but what we have here, folks, is that we have the current event situation in the political theater ramping up. The politicians all going back to their respective states, going to the Iowa State Fair, making their rounds through the country. And this is what we're waiting for. Meanwhile, they continue to launch attacks against the American people, against entrepreneurs, capitalists trying to build opportunity, and against our former president. And for those of you guys who have been tapped in and watching my show, you understand that I'm not here for President Trump to save me, for President Biden to save me, for President Obama to come back and save us. I'm not waiting for any politician to save us. But the problem is that we have a justice system that has been hijacked and corrupted from within. While we continue to go after folks trying to do legitimate things, and I'm not here to defend Mr. Trump, I'm just saying I'm defending these exchanges. I'm defending these companies trying to get into the cryptocurrency space. I'm defending folks that want to have freedom of speech to be able to express themselves in this country. I'm talking about the folks, the silent majority that just don't want to go with these silly, agendas. They're just so backwards. And those that don't want to see opportunity within America destroyed. See, these aren't political. These aren't left-right issues for me. And this is the problem that we face here in the United States. While we try to fix these things at a fundamental level that have been flipped upside down and are under attack, these folks have no limit on the debt limit, right? They can run up as much on that debt limit as they want for the next year and a half And they're going to be able to funnel all of their money into these agendas that they're pushing on us, into the next election, into corrupt Department of Justice investigations, and Congress as well, playing their role, protecting the banks, protecting Wall Streets, protecting the big industries that fund their political campaigns. Meanwhile, American people are under attack. American businesses under attack. Meanwhile, the American dream is dead. That's the problem. That's where I come from as a frustrated American. Whether you love the guy or hate him, we're about to potentially see the fourth indictment of our former president, and let all truth be revealed. And if they have something on him, I'm sure they'll get it. If they have something on him, I'm sure they'll get it. Now, when I look at what's taking place on the other side, it looks like we have something. Looks like we have millions of dollars in bribery. Looks like we have a whole agenda that's really been exposed, right, over the last year. Now, the mainstream media in full panic mode, right? You've seen the meltdowns on these mainstream media talking heads, all the way from the financial media Jim Cramers of the world and those that have tried to protect the Ethereum free pass monopoly when it comes to crypto, all the way to the larger financial pundits like Jim Cramer and others, and then all the way to the CNNs and the Fox News and all this whole thing getting exposed. It's a beautiful thing to see. And I think that the real majority in this country needs to stop being silent. And that's what I'm talking about. Folks want me to just stick to crypto. Well, I want to save a country here, and I want to be able to provide an opportunity for my children and your children alike. See, the opportunity that I had, that our parents had, is no longer what it once was. It ain't, $20 to go to the family fair anymore, like I was saying. And that's just the surface level problems that we have. When you go to the institutional fundamental levels and you see that our country has been hijacked by a corporation that is bankrupt, but they're so drunk on their own power and they have no plan on letting up. There's no debt ceiling limit. Another year and a half. Even though they know they got caught, it's just like the crypto bros that are manipulating this thing behind the scenes with all these new stable coins. It's like they know they got caught, so they just send it. They say, well, we got caught with all these other, with Tether, with what we were doing on our exchange, with trading against our clients. We've been caught. We're going down. We're being sued by the SEC, but that's not going to stop us from launching the next stablecoin. It's not going to stop them from launching their next attacks. And so you guys are seeing that. There is a serious move to really disrupt what is, America as we know it, right? And they've succeeded. And we can't just be silent anymore. And we can't just think that these guys are going to save us, whether that's President Trump, whether that's the next politician that's going to be in there, whether that's Robert Kennedy Jr. who's shaking things up. What I do like to see is the changes here. And the rhetoric has changed. The conversation has opened up. Many people taking off the blinders, waking up from the dream, right? And realizing, wow, this isn't a participation trophy economy anymore. Saying, honey, we better figure out a plan here. And that's what we've always brought this back to. Now, folks make fun of me. They attack me. The trolls hate on me for putting clickbait titles in. Supply shock for XRP. Well, before I get to my clickbait, I'm going to make you listen to an hour of us breaking down the real situation and how it's going to impact the family and covering the things that aren't sexy but need to be talked about, i.e. the true economic situation, the current events, and the world stage theater here that we're breaking down. I don't know why Alexa must have been listening to me, or not Alexa, but my Siri. They're always listening to us, and we're not going to let up. We know you're listening to us. We know you don't like us getting vocal, but that's why we're going to double down, because we have the truth on our side, which is what I've been talking about with this whole XRP case. The whole thing is much bigger than just XRP, much bigger than just some crypto gains. It's about saving our country. Yes. If we don't save our country and we have, this crypto, what's that going to do for us? If they're able to tax us into oblivion, steal our wealth so that they can, hijack our opportunity and only keep it for themselves, what good is the crypto going to do for us? For those that say stick to crypto, bro. Is XRP going to save us from that? It's not. Is XRP part of leveling the playing field? Is it a fantastic neutral bridge currency? 100%. That's why we've loaded up on a bunch of it, right? That's why we've loaded up on other neutral currencies as well, right? But I love how the haters come at me for, oh, you love your clickbait. The whole game's clickbait, brother. If you're posting on YouTube, you are trying to bait people into watching your content. Okay. But if I couldn't back it up every single night, if I couldn't back up every headline that I throw out there, then folks wouldn't watch us. But they continue to, and that's why our program continues to grow, is because we're helping real people start their side hustle, grow their business, figure out how to get a raise at their job, figure out how to prep, apply some of this hype, apply some of this education that we're providing to their lives in a way that can actually make real change, right? That goes past the hype. With that being said, let's continue on. This is what we're talking about, folks. There's major moves on the world stage, and we got to watch Poland here closely. I'm going to show you guys this from Jim Rickards. Let's take another sip of coffee. Fantastic. Other than the pumpkin spice latte. Jim Rickards, let's get it. What's up with Poland acquiring 300 metric tons of gold? They wouldn't be planning to invade Western Ukraine, divide the country with Russia, and send Zelensky back to obscurity he deserves. Watch this space. Poland's central bank ramps up gold purchases during July. 22.4 tons in July. And they continue to buy gold for a fourth consecutive month. Also, we line that up. See, this is a currency war, but it's also lining up, unfortunately, with a kinetic war. Real troops, real military hardware on the ground and moving. Tanks and armored vehicles with the Polish army and other foreign militaries have been spotted on the move in the capital city of Warsaw tonight in preparation for the Armed Forces Day Parade on August 15th, which commemorates the victory by Poland against the Soviet Union in 1920. So, under the guise of Military Day Parade, we got a little bit of troop movement. Okay, maybe it's just normal. Maybe we're just getting ready for the parade. But how do we explain loading up for the fourth consecutive month on gold? See, there is a shift that is underway, and Poland is very important in this region. So we're going to have to be watching this, folks. This is a situation that we continue to pray for peace. But the counteroffensive that was just launched by Ukraine did not go too well for them. And all the reports that we're getting on the ground is that they were pretty much stifled, capturing back a few points here and there, but for the most part stifled. And then you're starting to see countries that are doing a different deal. This is what we've been talking about. The BRICS summit coming up the 22nd through the 24th of this month. The shift is here. Folks moving away from the West, not only militarily, but also with their currencies. And we covered it this weekend. The United States begging Saudi Arabia to confirm. The United States is so pathetic. Begging Saudi Arabia to confirm that they're not going to be settling oil trade with the Chinese currency. Begging our allies to use our US dollar and not to be using the Chinese currency, not to be settling in gold, not to be settling outside of the dollar. And they don't care. They're laughing at us. It is an absolute joke. And like I said, some of these countries like Poland, they're right on the action, right? They're pretty much on the front lines over there. They don't have a choice to play games. They don't have time for the United States to beg them to use the US dollar, right? And this is what I was talking about earlier. I mentioned this chart here. Interesting facts about 1929 versus 2023. In 1929, that was the roaring 20s that led us up to the Great Depression. First market peak was September 2nd, 1929, plus 4 months equals January 2nd, 2022. The second market peak, April 15th, 1929, plus 4 months, brings you to August 15th, 2023. So are we seeing this second peak right now coming in right around the middle of August, correlating to a similar 1-2 peak that we saw in 1929 before we had an incredible crash down? Let's take a look at this chart. Now, this is your Dow Jones, 1929. You're seeing the S&P has gone up, right? Another double peak as well. And this is from the 1929-1930 crash. And look at that, right? So the peak there was September 2nd, 1929. And then April 15th, that next spring there in 1930, we get a similar peak, that return to normal phase on that chart that always gets shared around, right? The market cycle charts, that return to normal. Oh, it's going to be okay. Don't worry. Time to get back in. And the FOMO comes back in right before they clean it back out. Now, how is this comparing? How is this lining back up? January 2nd, 2022, we top out for the Dow Jones. Now here we are. Look how close. Now we didn't even fall that much compared to the last chart. Look, we fall down quite a bit. Then we bounced there April 15th, 1930. Now we're setting up here. January 2nd is when we topped out. Here in August, we're already back up to where we're at. We might even go break a new high. That second peak coming in. What do you guys think happens next, right? And boy, can you believe this for the Dow Jones? I mean, just coming back down here, I remember, back not too long ago when this thing was trading sub 20,000, sub 10,000, right? After the '08 crash, all the way back down to about 6,000. Now here we are, 35. We topped out above 36,000 for that Dow Jones. Interesting to watch that setup. Now, the scary math behind the world's safest assets. Washington has laid the seeds of a crisis that Wall Street can no longer ignore. Around 3/4 of treasuries must be rolled over within 5 years. Say you added just the 1 PPT to the average interest rate in the CBO's forecast and kept every other number unchanged. That would result in an additional $3.5 trillion in federal debt by 2033. The government's annual interest alone would then be $2 trillion. For perspective, individual income taxes are set to only bring in $2.5 trillion this year. So we're looking at the share of Treasury bills, notes, and bonds held by the public maturing within the given time frame. So 75%, around 3/4 of these Treasury bills, notes, and bonds need to be refinanced in the next 5 years, folks. This is the problem. You look at all of the bank balance sheets. This is why it's being reported that they're in just the U.S. banks alone have over $600 billion of unrealized losses on their balance sheets, and it's because of these T-bills, notes, and bonds that they're holding, right? They're holding them for way less than what they're trading at right now. Now we move on over to this moment, right? And this is former Fed Chair Alan Greenspan. And Geneva Roche-Decter says the moment when someone asks if U.S. Treasuries are safe. And it's funny because I covered a tweet yesterday. I recall it was something about, J.P. Morgan or someone finally admitting that the bonds weren't safe. Or maybe it was the Financial Times. It was a Financial Times article. And I'm like, okay, the bond market just had its worst year ever in history in 2022. And now it's taking us all the way until August of the next year to admit that maybe treasuries aren't the safe play anymore. But you guys listen in on this clip, former Fed Chair Alan Greenspan.
Are U.S. Treasury bonds still safe to invest in?
Very much so. I think this is not an issue of credit rating. The United States can pay any debt it has because we can always print money to do that. So there is zero probability of default.
Are U.S. Treasury bonds still safe to invest in?
Very much so. I think this is not an issue.
You gotta love it.
Credit rating.
You gotta love it, folks. We can always print more money. And this is why. I'm going to tell you guys this right now. It's baked into the cake 100%. They are choosing default by inflation, default through inflation, right? Where they are going to print their way out of this, and eventually they will have to reset this currency, reset and restructure this debt. They will not be able to pay this back unless they literally just print their way out of it, just like he's suggesting right here. It's no problem for the bonds because we can just print more money. Well, yeah, when you get paid back on that T-note, that T-bill, or that bond, what are you receiving back, right? You're receiving your dollars back, but they've been devalued, right? Now, if you believe the data, right, the CPI at 3%, they would tell you that the trend is we're only at about 3% inflation year over year. Like I was saying, Good luck finding anything that's only inflated 3% compared to last year. But their target is 2%. So they're admitting it's part of their program, 2%, which who knows why they came up with this number. Because it allows them to do what we're talking about right here, run up a deficit and to be able to just print their way and cover themselves, paper over the whole economy, which is what they're doing. And look at all the reverse repo, all-time highs. Look at all the new money lending capabilities there, programs and facilities, credit facilities, right? But that's all dried up. That's all dried up, and no one's wanting to take on new debt, and they're having to squeeze the credit limits right now. So we're actually now in a credit crisis, and because no one wants to issue new debt, because a lot of the debt that they've already issued is not solvent. It's not structurally good. Businesses, real estate, and lending, they have not been good debt that they've issued, right? Along with the bonds that they've added to their balance sheets as well. So it's not just the $600 billion in unrealized losses that these banks have. The problem compounds when you consider all of the real estate that's defunct and insolvent as well, not what it used to be. And I'm going to highlight that in the next article right here. Small banks, and this is where it's going to hit small and regional banks the most. Small banks now hold a massive $1.9 trillion of commercial real estate loans. This is up nearly $1 trillion since 2017, while large bank exposure stood flat. CRE is also dealing with mass vacancies, that's commercial real estate, dealing with mass vacancies, and prices are down 20% in 1 year. The worst part, over $1.5 trillion of commercial real estate loans are due to be refinanced by 2025. Many of these loans have seen rates nearly double, higher rates, falling prices, and mass vacancies, all with record levels of exposure to the same banks that almost clapped this year. What could go wrong? Same banks that have $600 billion in unrealized losses on the bonds that they hold. Same real estate market that's now looking at a new construction level that's at an all-time high. Now, we're going to get the builder permits data this week, and we're going to see if the builders are still trying to push them out as fast as they can. But you're seeing, and I'm seeing it around my area too, the amount of new inventory that's coming in is substantial in these areas that have been hot. And you can go look, Texas has the most amount of construction in the country, and that's on single family homes. I'm not sure on the multifamily properties as well, but you have a bunch of commercial new multifamily coming online. And then you have a bunch of new developments that are being finished off as well. And so, and I know in my town, you can't find an empty lot, in town anymore. There's almost none, right? And so all these communities are getting filled out, new developments coming online. Meanwhile, the mass vacancies hitting the real estate market here. And now remember, not all real estate is created equal, but this is generalized numbers. This is a general problem when we look at the $1.9 trillion of commercial real estate that has to come, that small banks hold, with $1.5 trillion of it due to be refinanced by 2025. Now, I can just do the quick maths on that one. And, 1.9 trillion, if you just round up to 2 trillion, 1.5 trillion of that due to be refinanced by 2025, that's about 75% of that as well, right? So 75% of commercial real estate to be refinanced by 2025, 75% of T-bills, bonds, and notes to be refinanced over the next, by 2025 as well. That's a problem. It's a big time problem. Now, it's not just here, though. It is in China as well. And there's an interesting development over here. Continued mayhem in Chinese real estate. Country Garden to suspend trading of at least 10 onshore bonds after a week where they failed to pay coupons of a couple international payments. Chinese money and credit trends look worse than U.S. trends post-Lehman, which means that either China rebounds now due to a strong response from the CCP, or else it is the end of the Chinese economy as we know it. We will have 100% dedicated coverage of China next week at Steno Research. Until then, you can read our weekly from earlier today that goes through all the details on Chinese real estate and the new issues with Country Garden. And now it doesn't just stop there. A rumor said large private equity and trust groups in China facing huge liquidity crisis, leading to the suspension of payments. The rumor went viral on WeChat overnight. Everbright Trust, Minmetals Trust, AVIC Trust issued urgent statements to refute the claims. Now, we bring this on over. I'm about to play a clip here from James Rickards, and he's talking about bridge currencies, right? The battle for the global currency. And he's talking about how you can use some of these other, even potentially cryptos, DLTs, and you could create a BRICS new settlement currency, but that doesn't necessarily mean that it's going to be a reserve currency. To be a reserve currency, you need a bond market and you need a securities market, right? You need stocks and securities equities that's denominated within that currency, and you need bonds that are issued and representative of that currency as well to be a reserve currency, not just used in settlement. That's the difference between a reserve currency and a settlement currency. So I'm about to play this clip, and it's interesting to note the issue that we're seeing with the bonds here, and it's basically across the board because central banks across this planet have had to raise interest rates to battle inflation. So that's why all these bond markets got jacked up. Then we get into the currency crisis and then the debt crisis as well. We have a record liquidity crisis hitting China, and these are the countries that are trying to establish a new reserve currency. They're trying to reset their sovereign currencies, okay? But I want you guys to listen here on this clip from Jim Rickards. Always love listening in on Jim, just a truly wealth of knowledge. Let's take a listen. Right. So Jim Rickards explained there that you need that bonds and you need securities as well to be a true reserve currency. Now, does it sound like we might need there's a need for a neutral bridge currency that also is one of the best settlement currencies in the world? Does it sound like we have a need for that? Yeah. And who has been the furthest along with conversations with central banks around the world? With the BRICS currency, countries, which, is now much more than just Brazil, Russia, India, China, South Africa. There are dozens upon dozens of countries that are looking to formally join BRICS. And like I said, even if they don't join BRICS, as long as they're dropping the dollar, they're part of the group that is turning away from the US dollar reserve currency. And then even with the Western central banks as well, who's the furthest along? It's not even close. Ripple, the company here, the little startup out of San Francisco that set out to put a dent in the universe, that set out to make XRP a world reserve digital currency, is the furthest along. Then when you look with the capabilities of XRP for you to actually issue bonds, derivatives, securities on the XRP ledger, right? Along with build your central bank digital currency on the XRP ledger in one day, build your Palau stablecoin that's US dollar backed on the XRP ledger. How about that? See, folks, it's not that I can point to a contract. I can't print out a contract that Ripple has with, these banks, these governments, these companies. But you can see what the need is, and someone's going to have to solve this. All of these bond markets have gotten jacked up. A lot of the securities markets have been overinflated, overvalued. And so it's a global reset of all markets, right? Of your securities equities markets, of your bonds market, of your real estate. The main economy on Main Street is being reset, right? And we have to move to a new system that has the ability to settle without either party trusting themselves, which is where blockchain DLT comes in. It's why gold and silver have always played a role, right? These are neutral currencies. They're just not good bridge currencies because they're not very liquid, right? Well, how do you make these liquid? DLT. So I'm not saying that I can print out the contract and the XRP is going to move all the money, right? But like I've been saying, we just have to get a piece of this. When you look at the bond markets, when you look at the equities markets, the derivatives markets, and you look at the payment flows across this planet, you don't have to get much for us to be in a completely different reality for XRP. And then, as I titled this episode here tonight, Supply Shock Incoming for XRP, we have to take a look at what has been happening here with how Ripple has been treating this new global reserve currency. Let's listen in here, a little clip here from Brad Garlinghouse.
So when I think about the presentation we just saw on what is blockchain, at the end of the day, I think about blockchain as something that can enable two parties to transact without a central counterparty. I've gotten the question before of, is Ripple a blockchain company? Is Ripple a crypto company? What is Ripple? And I've said, no, Ripple's a payments company. We're solving a payments problem. We happen to use blockchain technologies. We happen to use a digital asset to solve that problem. But at its core, Ripple is selling solutions to banks, to financial institutions, to payment providers globally that enables them to transact with much lower cost, much faster, and to improve, I'll just generically for now, we go deeper later, but around how liquidity is managed, how cross-border transactions are managed. So when I think about the presentation we just saw on what is blockchain.
There you have it. And how have they been treating this global reserve currency as far as the supply? Well, this was circulating this weekend, and this was XRP public liquidity. Now, this was from the 25th of July last year, 2022, but it's important to bring this back up again. Although this is old, it still applies, and we have to ask the question, what is the current situation? But if you go look at xrpscan.com and you go look at these exchanges, right, there is not that much XRP available, right? At the time of this picture that was captured, only less than 11% of XRP supply is available. Now, this is XRP that is not held by the exchange's clients that already own XRP. This is the XRP that's available, right? Like if you wanted to go buy XRP, obviously this is from last year, but Upbit had the most. They're out of Korea, South Korea, 3.8 billion, but Kraken only has 541 million. Binance only had 494 million. And this is why it's tough to actually get these numbers, because if you go look at the Binance wallets, they have billions of XRP, right? But you go look at how much extra XRP do they have that's not supposed to be one of their clients' XRP. It's not that much, right? These numbers are from last year, but it's actually even less, right? It's actually even less than what we're looking at right here, because we know that Ripple has not been selling to exchanges since 2019. Ripple stopped selling XRP in 2019, and the remaining XRP is being used for ODL. They've only been selling it to their on-demand liquidity partners. So I retweeted and I said, we have been warning about the supply shock incoming for XRP. Unless Ripple starts selling to exchanges again, we might have a problem. Now, this is where this gets interesting, because they can sell to exchanges. Programmatic sales, obviously that's under appeal, and the sales by the individuals under appeal. But what is not under appeal is the just selling directly to exchanges, I guess, not in a programmatic fashion, right? The secondary market, and we know that in and of itself, XRP is not a security, right? So this is what we're looking at right here with the supply shock incoming for XRP. And then I put out another video. These exchanges are coming for your XRP. This is Gemini. And once again, they did this yesterday. They're doing it again today. And it's closed off for now, but they say the faucet is now open. Claim your XRP now. Simply enter your email and you can claim up to 20 XRP, but it only lasted for like an hour. And they say the XRP faucet is closed off for the day. Come back again tomorrow. And I put out the video to make the point that they're coming for your XRP. Bitstamp offering you 2% for their lend program. This is just the start of many programs, right? And what I'm watching is, are we going to be getting more XRP from Ripple to these exchanges? And is this why they've made such a hard push for you to give them your XRP? Let us custody your XRP, right? And you better read those terms and conditions on whether or not they're leveraging out your XRP, if they're using your XRP for something else. And we're seeing the same setup in the precious metals vaults as well. Take a look at this one here from Bai Jiajun. The silver inventory on the Shanghai Futures Exchange has once again fallen below 1,500 tons. A total of 53,005 kilograms flowed out this week. Massive drawdown of the Shanghai Futures Vault on silver. Now, to see the purchasing power and the true inflation, I give you this example right here. The United States in 1960, your median family income was $5,600 per year. The median cost of a house was $11,900. So the average cost of a house was just over 2 times what someone made per year. In 2023, your median family income, $70,000. Median cost of a house, $416,000, right? There's a little discrepancy there. But when you price it in an ounce of gold, this is incredible. 1960, the price of an ounce of gold, $36. Median cost of a house in ounces of gold, $326. In 2023, the price of an ounce of gold has obviously gone up substantially, $1,912. And the median cost of a house in ounces of gold is only 217. So this really displays, one, the inflation, and two, the other way to look at it is the purchasing power, the value that's been held within gold, taking less, over 100 less ounces to buy that same median cost of the average home in America. Let that one sink in. Folks, to me, this setup's very clear. We have an opportunity to stack suppressed assets that have a limited supply. Of course, they're going to mine new silver, mine new gold, and maybe one day they'll be able to mine some asteroids. We'll see about that. But it's, relatively speaking, as the dynamic setup right now, there's a 230 million ounce deficit last year. While we see the worst year on record for the bond market, we see the third worst year ever for the 60-40 portfolio. It's funny, I'm walking through the fairgrounds yesterday and I get the guy from Edward Jones trying to, give you a free speech to pitch you on opening up a 401k or whatever. They got their financial services, right? And he spotted me walking by and he said, hey, listen to our spiel and you'll get a chance to earn a $50 dinner. And first off, I was like, okay, $50 dinner. I mean, you can barely buy the family dinner at McDonald's for $50, let alone $50 at your favorite restaurant, is what he said. But I'm just laughing, I'm thinking, man, I don't know if you want to have a conversation with me, my guy. I don't know. If you want to talk about it, we can talk about your traditional 60-40 portfolio that Wall Street's been shilling you. We can talk about the worst year ever for bonds. And we can talk about alternative investments that I'm making and that I think, the masses are looking for that similar opportunity. One, how do we preserve it? That's our precious metals defensive play. How do we multiply it? Well, one, we step down and we leverage full throttle on our businesses. And then on our investments, we look at cryptocurrencies that have a limited supply, right? We talk about supply shock. We talk about tokenomics. This isn't inflationary, XRP being deflationary. And the potential setup for XRP to not even be filling up the coffers of these exchanges, this gets very interesting. And it's such a coincidence that we have both the the silver vaults, the precious metals vaults getting drained, along with the vault there that Ripple has as well getting drained. They've actually been selling more XRP this year compared to last year. So we're coming towards an inflection point where price discovery with this new reality gets discovered. And for me, I'm excited whether that means XRP goes to $5, $50, or $500 over the course of the next decade. As we look back at, how has gold performed since 1960? For me, I look at how is XRP going to perform over the next 10 to 20 years? How is silver going to perform over the next 10 to 20 years? I've been teaching my daughter that this is money, and she's obsessed with my little 1 ounce coins right here. And, we tell her, oh, you want your money? Okay, you earned 2 tokens today. Right? And we give her two 1 ouncers. And I'm just thinking to myself, right now, these are $25 an ounce, right? After you pay your premium to your dealers, the premium's been going up. You might be up to about $30 an ounce. And it's just interesting to see, where is this going to go when she's, 10, 20 years down the road? When she's actually having to enter the world of making, keeping, and spending money, what's that reality going to look like for 1 ounce of silver, for 1 ounce of gold, for 1 XRP? $5, $50, $589 for silver. Are we looking at, we're at $25 an ounce now, 3 digits gets thrown out, 4 digits gets thrown out. That's probably crazy. Are we looking at 3-digit silver? We're looking at $50 silver. For me, I'm doing my part to not only teach my daughter about, what is real money, what is sound money, what is digital currencies with utility, but we are stacking the heck out of these assets while we still have an opportunity. So if you're looking to get your cryptocurrencies or if you're looking to get some precious metals, just head on over to my website, ZachRector.com, and we can get you covered. I was thoroughly impressed with Uphold. Just had an interview with the CEO of Uphold, Simon McLaughlin. If you guys didn't check out that one, make sure you guys do. Thoroughly impressed with Uphold and the fact that they don't loan out customer deposits. They just hold your assets What a novel concept, right? They just simply hold your assets, and they have different programs that are coming. They're going to implement AMMs, automated market makers as well. Very excited to see how they're the different products that they've got coming our way. The ability to leverage our XRP through credit cards coming as well. And then he did say that they want to fire back up the staking program next year as well. So very interesting conversation over there with one of the few legitimate actors in the space when it comes to exchanges. And so that was a lot of fun. But I had to thank Simon. I said, man, I just want to personally thank you for giving us the ability to absolutely stack the heck out of this thing during the last 2 years where trading wasn't available in the US for the most part. And so you guys can go on over to my website. I got a link there for Uphold, Qcoin, and Coinbase, which now has XRP listed again. And then we also have the link for your precious metals as well, and we'd be happy to help you out. If you're looking to get tapped in with our community, it's all over there at my website, ZachRector.com. And on the way out, if you guys could do me a massive favor by absolutely smashing that thumbs up, make sure you hit that subscription and notification bell so you don't miss any of our updates. And stay tuned. I'll let you guys know on Twitter whether or not we're going to have a space tonight or not. But as of now, it is postponed. So I will see you guys tomorrow. If we don't make it back on tonight, appreciate all of you guys for coming through. It's been an absolute pleasure, and I hope you guys have a blessed rest of your Sunday. God bless you all.